Hello everyone, welcome to Options with Doug. Streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics in my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. Here are the key tenets to my approach for trading. This is the basis of my approach for trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And let me just clarify this just a minute. There were some questions about positional analysis earlier this week. So let's think about different ways of analyzing a market. There's fundamental analysis. You're looking at price to earnings ratio and various metrics about the stock itself, the cash flow. Then there's technical analysis, looking at charts, looking at past price action to deduce what may happen in the future. And then there's positional analysis, again, looking at how traders and market makers are positioned in the options market and how those positions change from day to day. The reason I focus on positional analysis is I believe it is forward-looking. This indicates how traders are positioning themselves in the market. So let's say, for example, the call wall and the absolute gamma strike move higher. This indicates that traders are looking for positioning themselves and accepting higher prices. So those are the different forms of analysis that I'm aware of. And again, I do look at charts, I do look at fundamentals, but I focus on positional analysis. All right, the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset and the way you like to trade. Questions and comments are welcome. and I will be watching both the Options-Jug chat channel as well as the chat and YouTube for your questions or comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. Hello, Hector. First for last. Welcome. Glad you're here as well. Now, I do have an announcement. I just received this information just a little while ago. I am trying to get some clarification, but it looks like Bookmap, this is not me, Bookmap is going to be making some changes to the chat and the stream, especially this seems to be affecting YouTube more, and I believe this will go into effect on Monday, that there will be a limitation on the comments in YouTube. I believe the way I read it is you will be restricted to one comment or question every 5 minutes in YouTube. All right, so I'm still trying to find out more information about that. It looks like that may be beginning on Monday. And I don't know if I doubt that restriction applies to Discord. So I would encourage everyone to join Bookmap Discord. All right, I'll as soon as I find out more, I will let you know. All right, here's my agenda for today, Friday, July 19th. First of all, I want to go over news items, economic data, and events for today to wrap up the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's start with news for today. Of course, today is the monthly options expiration. And let's take a look at the options expiration concentration. What this chart is showing is delta notional on the vertical axis. The orange bars are showing call delta notional. This is July over here. So call delta notional positive and blue delta notional negative. So you can see that it is a call dominated options expiration, but not nearly as call dominated as it was earlier in the week. So again, this is delta notional market makers position, and this is for the S&P 500, NASDAQ, and Russell 2000. So again, this is July, showing a slightly call-dominated expiration. All right, let's get out of this. All right, so that is the expiration today, call-dominated. Spotgamma has been looking for a window of weakness. I'll talk more about this in just a few minutes. From the VIX expiration that was on Wednesday up into today or early next week. And that has certainly played out. Again, we'll take a closer look at that in a few minutes. All right, so that's options expiration. Note for SPX, there was already one expiration today, the AM expiration. So part of that SPX, gamma, delta notional, has already expired today. All right, next item in the news, Netflix earnings. We'll take a look at Netflix when I get to setups in a few minutes. And Slotarazi says option dealers have officially broken down into negative gamma. Yeah, so gamma notional, I'll cover that in a few minutes. At the beginning of the day was already negative and becoming more negative. All right, so Netflix earnings. Again, we'll take a look at Netflix in a few minutes. And I'm sure everybody has heard about the CrowdStrike Microsoft outage. And apparently this was a content update, CrowdStrike content update for Windows host. caused an outage, and it apparently affected airlines and other businesses. All right, so we'll take a look at CrowdStrike and Microsoft as well. All right, let's move on. So that's news. Let's take a look at positional analysis now. So this is the S&P 500 futures in Bookmap, the ES futures. And I do want to take a look at a higher time frame before taking a closer look at this chart. This is the SPX, the underlying index, one-day chart. And I'm going to point out the key turning points. So a big rally began last year. April 1st this year, correction began, concern about interest rates. And then note the rally resumed the Monday after the April expiration. And Spotgamma is, in the AM Founders note today, talked about the potential for this type of reversal sometime early next week, potentially, citing similarities between the April options expiration and the July options expiration. All right, so focusing again on the expiration, the key turning points. That's the April expiration, rally resumed. Here's the May expiration, pullback, rally resumed again. Here's the June expiration, very large quarterly expiration, a little bit of a consolidation around that expiration. And let's pick that up now with a 1-hour chart. Back to Thinkorswim, 1-hour chart. This red vertical line, probably very difficult to see. That is the June expiration. SPX consolidation around that level. Then rally resumed around the beginning of July. Note that volatility started to pick up, the historical volatility. That was last week, starting last Thursday. You can see the pickup in the historical volatility shown by the light blue line in the subchart. Then this is the Wednesday VIX expiration. And just like Spotgamma has been looking for, that window of weakness began with the VIX expiration on Wednesday. And again, looking for a potential for a turnaround after the July expiration. So maybe early next week. So that's why I like to point out the turning points, the pivots at all of the expiration dates. All right, let's take a look at the levels on this chart. First of all, the dash. Let me zoom in on this. That pesky 5,000 level is back. All right, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the closing price for SPX from last Friday. Note SPX began trading below that level yesterday. Dark shaded portion showing regular trading hours. Tested that level today. Now trading firmly lower. All right, so again, that's based on the options market, based on the closing price for SPX from last Friday. Here's the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. I do post those levels in Discord every evening the day before. All right, so SPX trading down to the lower daily expected move today, and that is just above the put wall at 5,500. So let me talk about the Spotgamma levels now. They're shown by the dark red lines. I'm going to point out the key daily levels. So first of all, 5,500 again is the put wall. That's a strike with largest net negative gamma that can be expected to act as support. And the next level up, two levels right next to each other. First of all, the 5550, that's the absolute gamma strike with the largest absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. Just above that at 5555 is the volatility trigger. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, like SPX is trading now, market makers are position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. And we'll see that on the Vanna model in just a couple of minutes. So S&P 500, NASDAQ, both trading firmly in negative gamma now, looking for wider trading ranges, more trend days, higher volatility. And then finally, the call wall is at 5750. That's a strike with the largest net positive gamma that can be expected to act as resistance, and certainly not in play for today. All right, shifts in levels. SPX, the volatility trigger did shift lower, and volatility trigger also shifted lower for SPY. So a bunch of fives here. Volatility trigger for SPX 5555, and for SPY 555. And for SPY, the absolute gamma strike also shifted lower. All right, let me restore this chart. We'll wrap up our view of SPX with a 1-minute chart to get a closer look at the levels in play for today. SPX, steady downtrend, maybe finding support at the lower daily expected move and the put wall. So earlier today, SPX found resistance around the 5555 volatility trigger and the zero gamma level that is 1 point below that. All right, let's go to Bookmap now. In Bookmap, I have my own cloud notes, so I can show SPX levels. You can't see the label here, but that's the 5554 zero gamma level, and the volatility trigger 1 point above that, acting as resistance along with the SPY 554 level just after the open today. Here's the 5500 put wall, and this is the lower daily expected move for ES, and I do calculate that independently from the SPX lower daily expected move. It did act as support earlier today. Now it looks like the 5500 put wall and the SPX lower daily expected move acting as support. It looks like some aggressive buyers are coming in, shown by the green volume dots. We'll take a look and see what options traders have been doing in just a minute. All right, so those are the levels in play for today. Note there is a difference in price between ES and SPX. That ES to SPX offset today is somewhere between 45 and 46. I'm using 46. So I'm using ES minus SPX equals 46. So I'm showing the SPX 5500 put wall at ES 5546. All right, that's the S&P 500. The volatility trigger at 55.55 on the upside and the 5,500 put wall on the downside so far today. Let's take a let me just wrap up shifts and levels again. So again, SPX and SPY volatility triggers both shifted lower, and for SPY the absolute gamma strike also shifted lower. So bearish shifts lower in the key daily levels for the S&P 500. All right, let's move on to NASDAQ now. Downtrend continues. So this is the NQ futures and Bookmap. Let's take a quick look at the underlying index charts. I'm going to go to QQQ first. QQQ 480 is the absolute gamma strike. Price broke below that level, right around 1015. Made it down to the 475 level. We'll take a look and see what that level is in just a minute. Note in between there are a couple of combo levels, and I don't believe there's much. The next level down for QQQ is the 470 put wall. And for QQQ, the volatility trigger and put wall both move lower. Same for NDX. Volatility trigger, put wall move lower. All right, so that's QQQ. Maybe finding support at the 474, 475 level. All right, that 475 is a large gamma 3 level. So again, I have my own cloud notes so I can show QQQ levels, NDX levels, and key NQ levels all in one column there. All right, let's take a look at NDX. Steady downtrend. NDX finding resistance around the 19,750 call wall, combo level just below that, and then the volatility trigger at 730, 19,730. All right, so that is the S&P 500 and NASDAQ. And again, for NASDAQ, for NDX and QQQ, volatility trigger and put walls both shifted lower. And for NDX, the absolute gamma strike did shift higher. All right, let's wrap up positional analysis now. First, I want to take a look at gamma notional. We'll take a look at market makers' position on the gamma curve at the beginning of the day. And as Slotarazi points out, options dealers have definitely broken into negative gamma. So what this is, market makers' gamma notional position on the gamma curve at the beginning of the day for the S&P 500 and NASDAQ. Note all these numbers are negative. What this indicates for an index that traders are long puts, market makers are short puts, hence the negative gamma, and they have to trade with price to hedge their delta exposure. And again, that leads to more wider trading ranges rather than mean reverting type range days. All right, in a negative gamma environment, I like to take a look at the Vanna model. Let's zoom in on this. What this chart is showing is market makers' delta notional on the vertical axis, price for SPX on the horizontal axis. There are two curves on this chart. The first curve shows how market makers' delta notional may change with changes in price only. And the purple curve adds implied volatility to the equation. That shows how market makers' delta notional may change with changes in price and implied volatility. And note, as price moves down, that increase in implied volatility will help to increase market makers' delta notional, and they will have to sell futures to hedge their delta exposure. That's as price decreases, so they are trading in the direction of price. All right, so for today, the high of the day for SPX was somewhere right around here, around 55, 57, just above the volatility trigger. Let's see where SPX is trading now. Right around 55.05. Just above the put wall. So as price has decreased today, implied volatility increases. Market makers' delta notional increases, and they have to sell futures to hedge their delta exposure. Let's just check. All right, so this is about where SPX is trading now. So from here to here, market makers' delta notional is increasing as price is decreasing, and they have to continue to sell futures to hedge their delta exposure. Now this can work both ways. If price starts to move up, implied volatility drops, market makers can buy back their short futures. All right, so that's the Vanna model. Again, I like to take a look at this in a negative gamma environment. All right, so based on this, my thesis for the day was, first of all, looking for higher volatility, negative gamma environment. Gamma notional at the beginning of the day, again, negative, price trading under volatility triggers, and also shifts lower levels. I was looking, my directional bias was bearish. All right, so that was my thesis for the day. Now let's move on, take a look at some setups. Let me zoom out of this. So as usual, I'm going to start with the S&P 500. I'm going to take a look at what options traders have been doing today. This is the hero signal. This is available to Spotgamma subscribers. What this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures, all into one combined signal. There are two lines on this chart. The first line is price for SPX, and the second line, the purple line, is the hero signal. Again, that's hedging impact real-time options, HIRO, showing options trades, market maker hedging activity in real time. A falling hero signal indicates traders are taking negative delta options positions. They are buying puts and or selling calls. And a rising hero signal indicates they are taking positive delta positions. They're buying calls and or selling puts. So that's the index signal. There's another signal that we can take a look at for the S&P 500, and that is the equity signal. That was pretty choppy in the morning, but it looks like it has smoothed out now. So in the morning, I was looking at the index signal. So what this signal is, the equity signal, this is showing options trades and market maker hedging activity for a combined signal of all 500 stocks in the S&P 500. All right, let's start with this morning. Let's go back to the index signal. I thought this was more clear in the morning. I'm going to zoom in on this chart. This is a pretty similar setup to yesterday. Initially in the morning, traders are taking positive delta positions. Flow alert comes in, gets your attention, that signals significant options activity and can often indicate mean reversion, a shift from positive delta to negative delta, and that's exactly what happened here. So the hero signal shifts to negative, price slowly moves lower, and finally breaks below the 55 key gamma strike. Note here, this initial move was a break below the 55 volatility trigger shown as the hedge wall there. So two breaks below key levels as traders were taking negative delta positions. Let's get a closer look and take a look at what they were doing. I'm going to shift to puts and calls. I'm going to have to jump to avoid the auto zoom. Jump back. So let's zoom in on this again. All right, so note initially in the morning, traders are buying calls, shown by the rising orange line. Flow alert comes in, and the call buyers take the foot off the gas. And they were also selling puts initially. That's shown by the rising blue line. The direction of these lines are in terms of option delta. And about the time they stop buying calls, they start buying puts, and price eventually breaks lower. All right, let's take a look at Bookmap now. Go back to the S&P 500. I'm going to zoom in on this. The (9:32 noon), the morning session. Give me just a moment. So here's the point where traders stopped buying calls, took their foot off the gas, started buying puts. The volume dots in Bookmap show market buy minus sell. Green volume dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. So as price moves up, buyers are exhausted. Sellers start to come in. Price makes a series of lower highs. So here, this is the break below the 55 volatility trigger. And then here was the break below the 55.50 absolute gamma strike. And then finally, price breaks down, and moves all the way down to the lower daily expected move. As traders stopped buying calls, started buying puts, and then aggressive sellers started to come in. That's shown by the magenta line of the subchart. That's cumulative volume delta falling. Also, sell stop orders help to fuel the move lower, shown by the falling yellow line there. And S&P 500 finally made it down, eventually made it down right around 130 to the 5,500 put wall. And it looks like the put wall may be doing its job, acting as support. All right, let's go back to Hero now. So it looks like the traders trading puts may be driving price. This is for the index again. Traders buying puts, price moves lower. They start selling puts around 11:30. Nice leading indicator. So right around 11:45. They start buying calls. Price had already started to move higher as traders were selling puts. price moves higher, start buying puts again, price moves lower. Now starting right around 120, 125, traders have started selling puts again and buying calls. Orange line, blue line moving in the same direction. That is a powerful directional indicator. And note that is happening as prices reach the 5,500 put wall right there. At the put wall, traders start selling puts and buying calls. Let's just check the equity signal. So in the equity signal, they continue to buy puts and sell calls, shown by the falling blue line and orange line. Hello, Anurag. Welcome. Glad you're here. Anurag asked, what was it in the chart that made you say that market will go down? Great call today. Thanks. First of all, it was Spotgamma's call. And the Spotgamma laid out their case in the AM Founders Note. They've been talking about the window of weakness beginning with the VIX expiration on Wednesday into the July expiration potentially early next week, and then potentially looking for a turnaround. So again, Spotgamma laid out the case for that. Very convincing, very interesting, insightful information. And I would refer you to the AM Founders Note. And I, again, I follow what's in that note often. Very insightful. And today, just looking at today, I'm looking at reactions at key levels, and I can see, again, what options traders are doing in the morning, as well as what traders are doing, the order flow in Bookmap. So saw those reversals at the 55.55 volatility trigger in the 55.50 absolute gamma strike, and looking for a move down to the 5,500 put wall. So again, for details of that, I would refer you to the AM Founders Note. All right, Anurag, I answered your question. I'm sorry. I don't understand your additional comment. So I just covered the S&P 500 in detail. Everything was bearish from 55.55 down to the 5,500 put wall. All right, let's move on. Take a look at NASDAQ now. All right, this is what this is NDX causing this line right here. Looks like some fund rebalancing, so we can see that is going. This is the combined signal for NDX and QQQ. Let me just zoom out, and we'll see what this is. So just like the index signal for the S&P 500, this is the index signal for the NASDAQ, combining NDX and QQQ. All right, so let's take a look at NDX now. Let me find it. I believe this occurs every monthly options expiration, some sort of rebalance. Somebody very mechanically, algorithmically buying calls that has an impact on the index signal. So this is the index signal, and while I'm not at full screen, let's take a look at the other signal that we can take a look at for the NASDAQ. That's the MAG 7 signal. That's showing options trades, market maker hedging activity for the stocks known as the Magnificent Seven. Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. So what this chart is showing is traders have been selling calls and buying puts in the Mag 7 stocks. And just like the equity signal, this was a little bit noisy in the morning. Let's go back to the NASDAQ signal and we'll zoom out so we don't see this distortion that began. So I'm going to go back to full screen, zoom in. All right, so we can see a little bit more clearly. Primarily call sellers were driving price. Choppy signal, but traders were buying calls, selling puts in the morning. Again, this is the index signal. And right around the same time as the S&P 500 reversed lower, they start selling calls, buying puts. Looks like a block order came in, institutional order. Somebody selling puts, later buying puts. So generally, orange line, blue line moving down in the same direction. And NASDAQ moves lower. And let's go to NQ. There's the initial move up. Didn't last long. Traders start taking negative delta options positions. Price reverses, that's right around the QQQ 481 level and the NQ 19,950 level. Price breaks below lower at the NDX 750 call wall level. Another entry point, pullback entry at the 730 volatility trigger. That's also the 480 absolute gamma strike. NDX makes a series of lower highs. Sorry, trying to edit this line. All right, so it looks like this downtrend may have been broken, as the S&P 500 found support at the 5,500 put wall. All right, let's go back to Hero now, and I'm running way behind. All right, let's move on. Let's take a look at some stocks. All right, the first stock I want to take a look at is Apple. Initially, traders were aggressively buying calls in Apple. Flow alert comes in, signaling significant options activity. Call buyers at the open, they were also selling puts. And as the call buyers take the foot off the gas, price moves lower. And if you were looking for a long this morning, pull back to the 225 key gamma strike. Good entry point for a long. Sorry about the volume dots. This is pretty typical of an expiration day. Large opening print. Huge opening print makes all the other dots, volume dots, smaller. Pull back right around the 225. Key gamma strike. Price moves lower. Options traders take the foot off the gas. Apple moves lower. All right, the next, Amazon. Find support just above the 180 put wall. Traders were selling puts. Let's take a look at Hero and see what they were doing. Go to Amazon. Zoom in on this a bit. So it's really put sellers. And with a large drop, higher increased volatility, options traders often like to sell puts. That's what has been going on today in several stocks. So they were buying calls, quickly turned to call sellers, but they were selling puts. Price moves higher. Call buyers take the foot off the gas, start selling calls, and then the put buyers take the foot off the gas and price consolidates. Let's move on. All right, CrowdStrike, stock in the news today. Just like Amazon, sharp drop in CrowdStrike. I think it may have been down maybe 50 points or so. Looks like the low was right around 291. Traders selling puts into that drop, taking advantage of the high implied volatility, also selling calls. So selling strangles, iron condors. And as the put sellers take the foot off the gas, traders continue to sell calls. Price consolidates, moves lower. And note for right around 10:30, some call buyers did come in. Price moved up. Then right around 11:30, they started selling calls again. Now buying puts, blue line, orange line moving the same direction. Price moves lower. Let's go to Bookmap. Go to CrowdStrike. Sharp move higher this morning. As traders are selling puts, put sellers take the foot off the gas, price consolidates, call buyers come in, and now they are buying puts and selling calls. Price moves lower. That's CrowdStrike. Microsoft also in the news. All right, here's Microsoft. Let's see what options traders are doing. Again, sorry about the volume dots, huge opening print. Let's go to Microsoft. Oops. Again, put sellers taking advantage of the drop in price, rising blue line, traders selling puts. Take the foot off the gas, right around the call wall, key gamma strike. Let's go back to Bookmap. So remember, 440 is the call wall. So if you're looking for a short opportunity today, this is what I was looking at. Multiple reverses at the call wall. So some short scalp opportunities at the call wall. You could have bought a put spread, sold a call spread, or just short stock several times. All right, let's take a look at Netflix. Again, Netflix reported earnings yesterday. Generally moving down. Let's see what options traders are doing. Go to Netflix. So in the case of Netflix, traders have been selling calls, also buying puts. really call sellers driving price. Close correlation between price action and call sellers in this case. Notice call sellers take the foot off the gas right around the 640 hedge wall. Price consolidates, and then right around as price moves up to the 650 key gamma strike, they start selling calls again. Now price is broken down below the 640 hedge wall, it looks like. Let's go back to Bookmap. Sorry, I just added Netflix today. I didn't have time to add price line levels. There's the 640 hedge wall. $650 key gamma strike. So price pinged between those two levels. Then resumed lower right at VWAP and the 650 level as traders started selling calls again. All right, let's take a look at Tesla. Very steady downtrend in Tesla. Let's take a look, see what options traders have been doing. Go to Tesla. So traders have been selling calls and buying puts. 250 is the key gamma strike, 247.50 hedge wall. Let's go back to Bookmap. 247.50. Good pullback entry for a short. Note how that lines up with the Market Pulse price change indicator. Extremes. So if you're looking for entry points for short, in this case there are more of these extremes than good entry points. Here's the next good entry point. So price reverses below VWAP, below the 247.50 hedge wall level as traders sell calls and buy puts. All right, Slow Darazi has been asking about call gamma unwind. Let's take a look at that. I'm going to move another chart over here. This is for Tesla. What I've done, this is my watch list. In the equity hub, Spotgamma equity hub, and I have ranked my watch list by next gamma, expiry gamma percentage from highest to lowest. And note all these are showing gamma expiring today. We know that Tesla has been very strong. Traders have been buying calls. Market makers sell the calls. And as expiration approaches, they've been buying calls that expire today. As expiration approaches, those calls start to lose value. Traders are selling calls. And also due to charm, the change in delta with the change in time, as time passes, those calls are quickly losing value. Market makers that have been buying stock to hedge their delta exposure as they sell calls. Traders buy calls, market makers sell the calls. And as those calls start to lose value, market makers' delta notional is decreasing, and they can sell their stock hedges. So that's a call gamma unwind, and definitely could be in play for Tesla. And any of these stocks really showing next expiry gamma percent over 30%. So quite a few on the list here. And Slotarazi was asking about Nvidia. Let's take a look at that. What this green is showing is call domination for Nvidia above 127. The green above, call domination. All those calls quickly losing value. Let's see where Nvidia is trading. Let's go back to Hero, go to Nvidia. So Nvidia trading down today. Traders are selling calls and buying puts. So for most of the day, orange line and blue line moving down, moving the same direction. Now maybe stabilizing, but again, call gamma unwind definitely going on here. Those calls are losing value. Market makers can sell their stock hedges. Let's go to Bookmap. Go to Nvidia. And Tesla has definitely been the strong stock this week. So down to Nvidia here, also moving lower. Let's go back to Hero. So 120 is the key gamma strike. 119 is the put wall, hedge wall. $119 put wall, hedge wall, 120 key gamma strike. Nvidia now trading below both of those levels. Steady downtrend. Pullback entries at VWAP for a short. First for last, ask, can I comment on IWM? Yeah, I actually took that out of Bookmap earlier today so I could add Netflix. So we can take a look at IWM in Hero. Let's go to IWM. So IWM and Spotgamma has been looking for weakness in IWM. I think probably everybody else as well. So initially in the morning, IWM moved up as traders were buying calls, shown by the rising orange line, selling puts. Flow alert comes in right as the Hero signal reverses. Traders start selling calls, start buying puts. Price moves down to the 216 hedge wall. Now consolidating, so a good move down from right around 218.50 maybe down to the 216 hedge wall. So definitely in the recent days, options activity has increased pretty substantially on IWM. All right, does anyone else have any questions, comments? Oh, Hector asked, how do you find opportunity in a stock? All right, let me show you what I do. Let's go to, actually, let me get out of full screen. So several things. First of all, I do scan. Where's Equity Hub? I do scan my watch list here in Equity Hub. I look for the shifts and levels. This is a 10-day history. So I do scan for this in the morning. So based on this, for example, for Apple, key gamma strike, key delta strike shifted lower. That's bearish. Check AMD. Key gamma strike, hedge wall shifted lower. That's bearish. Amazon 4 levels shifted lower. That's very bearish. So Hector, that's one way. Another way, let's go back to Hero. You can also watch for alerts, and you can filter this out. So The only things shown are the alerts for your watch list. I have several watch lists. So let's take a look at the most recent alert here for Adobe. Flow alert coming in. So a lot of the flow alerts come in right at the morning. So I watch those. So that's another way to find setups. Plus, I just scanned through this quickly. So let's say for this morning, I saw the call wall for Microsoft up above, price moving up to that level, and looking for a short opportunity around that call wall. Really didn't pay off other than a few scalps. All right, Anurag asking about 1026 on the S&P 500, I assume. Let's go to S&P 500. You're welcome, Hector. All right, on 1026, I would, that was a little bit late. 1026, a little bit late for a short. When I was looking at initial entry, reversal at the 55 hedge wall, that was just after 940. And the reversal at the 55.50 key gamma strike, and that was just after 1010. Let's go to Bookmap, go to the S&P 500. All right, so I know traders were taking negative delta positions. I'm looking for price action at key levels. So aggressive sellers start to come in. Hero shifts negative. Price makes a series of lower highs. Here's another entry point. Lower high, reversal at the 550 absolute gamma strike. Everything looks bearish at this point. 1026, I'm not sure. Another break below VWAP. So if you're going short at 1026, let's see where that is. I'd say you're a little bit late. All right. Hector says, you're welcome. Hector says, thank you, you're welcome. With your analysis, do you think would be worth some analysis on all stocks, like below 20 RSI and above 80 RSI, for getting the trend? I assume you mean right when crashes or explodes. I do not look at RSI at all. So again, I talked about my use of positional analysis rather than and relying primarily on positional analysis, forward-looking, I believe, rather than looking at lagging indicators. So nothing wrong with that, nothing wrong with looking at RSI. It's just not something that I look at. But if you want to make that part of your process, then that's great. It's just not something that I do. All right, last call for questions or stocks. All right, everyone, my time is up. I want to thank you for watching. Thank you for your questions and comments. Remember, I believe on Monday on YouTube there will be a limit to the questions, comments. It looks like one every 5 minutes. I'll see if I can find more clarification on that. I urge everyone to join Discord. I don't believe that limitation does apply to Discord, but I believe there is a verification process that you need to go through for Discord. And I believe you need to be a Bookmap subscriber. Now there's a free version of Bookmap. You can subscribe to that. So again, I urge everyone to consider joining us here on Discord. As soon as I find out more information, I will post that in Discord. Everyone have a great weekend, and I will see you on Monday. Thanks for watching. Thanks for your questions and comments.